We are live now.
Okay, thank you. Good afternoon, everyone, and welcome. We will get started and begin the meeting. I call to order the meeting of the NVTA Finance Committee for June 17th, 2021. First, we have the resolution for the Finance Committee to conduct our meeting electronically. It's in our packet. Do we have a motion to adopt the resolution?
So moved, Chair Randall.
Second? Do we have a second?
Second, Dr. Crystal.
Thank you. Any discussion? Hearing none, is anyone opposed to adoption of the resolution? Okay, hearing none, then it passes unanimously. Next, we move on to approval of the summary minutes of March 18th, 2021. Are there any corrections or additions to the minutes? If not, do we have a motion to approve?
So moved, Chair.
Second.
Second by Chair McKay. Thank you. Is there any discussion? Hearing none, is there anyone opposed to approval of the minutes? Okay, hearing no opposition, the minutes are approved unanimously. Okay, moving on to item number 4. This is regarding an update of reimbursement parameter study. Mr. Longi, I think this is up to you.
Thank you, Mayor Rochelle. For the new members of the committee, the parameter study has been ongoing since FY 2020. So this is just an update on the work that we've been doing. And basically, it's kind of a refresher for the newer committee members as to the purpose of this. We have been looking at reimbursement submitted, the expenses submitted for reimbursement over some time, and we found that there's a lot of differentials across the region as to what type of expenses are being submitted and whether certain types of expenses are being submitted at all. So the purpose of this study is, number one, transparency, so that all the jurisdictions and agencies across the region are operating from the same music sheet, if you will, and knowing what's reimbursable. Also, it is the term equity, we were using it before the summer of 2020 in this context. But really, in our context here, it's so that all jurisdictions know what they have the option to submit for reimbursement. Consistency kind of goes with that same statement. Everybody's working under the same rules and accountable. That is so that we are knowing what is going on with the public's funds and the funds that have been entrusted to the authority. So with that, progress on the study has been hampered by, I say staff commitments and priorities. It's really NVTA staff commitments and priorities, mostly focused on me. There's some bandwidth issues there, but I hope that we'll be wrapping this up in the next couple of months. Really, the study breaks down into 2 areas, and I think we have across the region a lot of consensus on this first area, which is the direct project costs. Now, obviously, that is also the easiest area to get consensus on. That is stuff like materials, concrete, steel, wire, cables, etc., a bus, more buses. Where we get into a little bit of work that still needs to be done is when we start to talk about things that are indirect project costs. Those things can be software that maybe a jurisdiction's planning group needs, but is only going to be used for that one project or be used for other projects and stays with the county. It doesn't become a part of the asset being built. It gets a little, the more you get into indirect costs, the less agreement we have, although I think the agreement, the lack of agreement is more related to knowledge and education versus what folks actually are trying to put in for reimbursement versus what others aren't. We've gotten some indirect project costs that include field trips to other states for fact-finding missions. We've got things that are related to, say, leave accruals, vacation accruals, and the leave of vacation time, that's time that's not actually spent on the project. So we're still working through those, and some of them go into, very detailed items like the internal cost charges for departmental use of a governmental building. So I'm talking about where like the department sits currently. We're not talking about construction trailers. Obviously, those would be considered a direct project cost. Just to give you some stats, the current trends, we looked at the 8 jurisdictions. We call it 8 because the only regional revenue fund project in Manassas Park is a VRE garage, and that falls under VRE. 4 of the 8 jurisdictions do not submit any staff charges at all. Of the remaining jurisdiction, 1 submits indirect and general administrative costs. So these areas of this of yet to be formed agreement are really concentrated in a small number of jurisdictions. Another jurisdiction uses what they term a cost recovery rate, which is basically they found a more efficient way to handle the indirect costs internally. We've looked at those at that indirect cost rate, and we think that the terms in it are actually very reasonable. So that is something that we would propose continue as an option for jurisdictions. We obviously would just like to know what is going on, what makes up that rate, so that we can make sure it otherwise fits with the resultant parameter study. Interestingly enough, of the $3.3 billion in regional revenue funds that have been assigned to projects, if the higher rate of utilization, the fully loaded indirect costs were to be spread across the whole region, in other words, if everyone were to do it at that larger, the larger set of expenses being submitted, $130 million would go to just those expenses out of the 3.3 billion. So, it's a pretty material number when you look at it, and especially as you remember that the authority's activities are going to be hopefully ongoing into perpetuity. We also looked at the use of the local distribution funds, because one of the things that we had heard from jurisdictions is if we can't use 30 or 70% money, regional revenue funds, how are we going to pay for this stuff? Well, it also came across that as the regional revenue fund came in, jurisdictions also had a brand new revenue source, the 30% funds. So we looked at how jurisdictions are using those. Only 4 of the 9 jurisdictions are not applying any of these charges to their 30% funds. 5 of them are. And many of these charges would be payable or would be suitable for 30% funds. So that's kind of the recap. Where we are now is we have been working this project through the RJAC several times, and we're going to go back several more times to try to build consensus amongst the region. I expect it to be 2 or 3 more times at least. And so we're about 3 months away from bringing something back to the Finance Committee that hopefully will, if we don't have complete regional agreement, we'll have a clear majority of regional agreement on this. So we are working with the jurisdictions and agencies through RJAC as well as individually to try to come to consensus on this. And with that, I'll be glad to reply to any questions.
Thank you, Mr. Longi. We're a small enough committee that anyone who has questions. No questions?
Madam Chair, this is Katie. I have just one question for Mr. Longi. Thank you for the presentation. Have we given any thought, or has staff given any thought to standardizing at the end of this analysis, to standardizing allowable charges with the state? Given I think almost all of us, I imagine, are probably engaged in similar reporting or filings with VDOT, for example, or other state funders. I wonder if it could, reduce the obligations for compliance if we essentially had the same allowable categories for reimbursement that, our smart scale projects, for example, might.
We haven't looked at smart scale, but we do find many times with the NVTA projects, the Commonwealth is actually a big expense. So more of it flows the opposite way. But you raise a good point, Board Member Crystal, and we'll take a look at that. We hadn't at this point because VDOT is usually an expense, not somebody in our world is not somebody we're reimbursing.
Do you have a follow-up, Board Member Crystal?
I don't know. Thank you. That's an interesting insight.
Okay, thank you. Any other questions or comments?
Madam Chairman, this is Delegate Watts.
Yes, ma'am.
I have, I think, a combination of two questions that are mostly, I think, for clarification, partly because I'm in my car without papers. So you are only talking about reimbursement that is appropriate to allocate to the local 30%. Is that correct?
Actually, Delegate Watts, we were talking about the regional revenue fund money, the 70% money. I did reference the 30%. Yes.
Without reference to 30%.
I referenced the 30%. I referenced the 30% is that is another avenue that could be used to pay for some of these expenses.
Okay, I think then that clarifies that we're only talking about 70. The focus is clear to me. 30% money as to how it's charged off is just fungible depending upon the size of one's transportation needs locally.
Correct.
Thank you.
Any follow-up, delegates? Okay. Any other comments or questions? Okay, then no action is required at this time. Is that correct, Mr. Longi?
Correct.
Okay, thank you. Thank you very much. Moving on to the next one, which is duplicate payment audit services. Mr. Longi.
Thank you, Mayor Rochelle. We are, with this item, presenting a problem and also proposing somewhat of a solution. So I'll work with it through you. Reimbursement requests, as you know, are really kind of at the heart of what we do outside of the planning and regional coordination, et cetera. What we have found is that while jurisdictions are responsible through our various agreements to ensure that we don't have duplicate submissions of expenses, they have occurred. We do believe that these are unintentional. They are, clerical errors, but they are actually can be very large clerical errors. So what we are looking at is, if I first feel I need to describe what a reimbursement package is and what it looks like in reality. Everybody knows, what an expense account looks like. But our reimbursement packages may have dozens of invoices and be hundreds of pages. Prior to the pandemic, we would get some of these in electronically and we would get some of them in on paper. With the pandemic, we switched all of them being over to being submitted electronically. And the PIM system is actually helping with that as well. To give you some examples of what we are looking at, it's not just the reimbursement. A single reimbursement could be within a single SPA, meaning basically a contract. Or a project may have multiple SPAs, and we have found duplicate reimbursements between those two SPAs. So the first one was actually $1.1 million, and the authority did not discover it. The project sponsor discovered it, reported it, and reimbursed it. The second example where we had two reimbursements, but they were in two different SPAs, but for the same project. It was a road alignment that was done in phases. That was 139,000, and it got caught by Peggy Teal's memory. To be quite honest with you, she recognized it as having been paid sometime earlier. But we can't obviously rely on that, especially with the volume of reimbursements, the volume of projects and everything else. We also have a third category, and that is duplicate reimbursements that are within one reimbursement package. Those are pretty easy to spot, and we really haven't been tracking them, but we expect that that is in the hundreds of thousands of dollars range. For the NVTA to be responsible to prevent duplicate payments, we would actually have to enter all that detail, effectively do all of the work that the jurisdictions and agencies are doing within our general ledger system. You don't want us to do that. We don't want to do that. Nobody wants to pay for that. That's not an efficient, way to deal with it.
You don't have the capacity to do that, do you?
Not without a considerable expense, and
Yeah.
it's not an expense we want to do. We did talk to our external auditors about it and about the issue, and together we came up with a data approach, and I'll outline that for you. We tested this data approach with the auditors by submitting data to them that we knew had duplicate payments in it, and the process that they are proposing did find them. So what we are looking at is turning over 8 or 9 projects to them that would contain 131 reimbursements. And again, each one of those can be hundreds of pages of documentation. That also represents $136 million in reimbursements. The cost for them to audit those as an agreed upon audit is $18,500. What we will get from that is, if the audit detects duplicate reimbursements, number one, we're going to get the money back. There's no question about that. Also, any positive detections will allow us to tighten things, and on both sides, our side as well as the agency submitting the reimbursement, and it'll give us kind of an assessment for how much risk we have out there. If we go through this process and we don't discover any duplicate reimbursements, unfortunately, that won't mean that there are none out there, because we are not proposing to run this on all of them. What it will do is give us some assurance, because the projects we're selecting would be what we would consider in the higher risk category. They are the longer projects, the more complicated projects, the larger dollar projects. And by filtering them that way, we hope to basically get an assessment. So the $18,500 would be a kind of an assurance perspective to let us get a sense for whether we have a larger systemic risk here or whether we don't. With that, I put this in as a discussion item because I wanted the committee to have the choice to pick it up or not. But were the committee desiring to pick this up, we could do a contract amendment with the external auditors, and with the committee's agreement, put this in front of the authority in July, and then undertake the work shortly after that. And with that, I'd be happy to respond to any questions.
Thank you, Mr. Lundy. Are there any questions or comments? I have a question. Is there in existence any software that would be able to catch these duplicate payments? Or did you say that and I missed it, or?
It is in the staff report. The software is actually at the locality level and agency level. Okay. Most general ledger systems do have features in them that, if used, would prevent these from coming to us.
I meant at the NVTA level.
Not really, because we don't enter that level of detail into any of our systems.
I see. Thank you. Any questions or comments? What would be the feeling of what is the will of the committee to move forward with this or not?
Madam Chair, I don't think I think my option would be to do, staff's recommendation. I don't think there's actually an option. Staff doesn't have the capacity to do it, and otherwise we are taking a chance of losing large amounts of money.
Thank you, Chair Randall, and I'm in total agreement with you. This is being safe rather than sorry.
Absolutely.
Same for me. I see no reason why we don't move forward.
Okay, thank you. Board.
I support taking it to the full authority as well. Thank you.
Okay, Delegate Watts? Delegate Watts? Her hand is up, so I'm going to assume.
Is this Delegate Watts? Can I be heard?
I'm sorry, I couldn't make that out. Okay, I think we're having audit.
Watts, if I have been disruptive, I'm sorry. I would just say, now that this has been brought forward, I really don't feel that we have any choice but to act on it.
Okay, thank you, Delegate Watts. Mr. Longi, is consensus sufficient, or would you like a formal vote?
Yes, ma'am. I think consensus is sufficient.
Okay, and by all means, you have that. Thank you. Okay, moving on to investment portfolio report. And Mr. Longi, would you like to just keep rolling through 7, 8, and 9, stopping, of course, for appropriate time for questions, but so that we can keep moving?
Certainly.
Thank you.
To that end, Deb and I had already coordinated, and she knew right where to land the visual. For those on the that are audio only, the MBTA performance is 37 basis points or 0.37%. Our benchmark, our highest benchmark, is 0.09%. So we are still doing very well against our benchmarks. The few things I did want to point out that we have been doing is, if you look at the chart right above, and apologies to the audio only participants, you will see that the amount of money that we have in 1 day to 1 month has been growing, as has the 1T 2-year funds, money that we have in that duration. What we are doing is using a strategy now where we are investing to maturities, putting our maturities in the same, spreading them out month to month, and then putting them in the same point in time where the transfer from the state comes in. What this does is significantly reduces the amount of administrative overhead for the portfolio, while at the same time ensuring we have a smooth turnover of money, fund maturities coming in on a regular basis. Part of that is our positioning for when interest rates start to rise again. We also are focusing on purchasing taxable municipal bonds. We have bought bonds from Arlington, Fairfax, City of Richmond, the Commonwealth, of course, and Calvert County, Maryland. The reason we're focusing in on the taxable bonds is because since the authority does not pay taxes, the additional interest that's earned on those bonds to compensate the typical bondholder for paying taxes, we just get the bank as part of our interest revenue. The reason we're focusing obviously in our own region is because we pretty well know Fairfax, we know Arlington. We have tried for other member jurisdiction municipal bonds, but we oftentimes get beat out on those by bigger portfolios. It's just a kind of a rough spot in the playground for us. But we are using that with some success. With that, I'll ask Deb to go to the chart on page 4. And again, with apologies to the audio attendees, this is the chart that, if you remember, it shows our performance against the benchmark over time. And again, the only thing that we can do in this type of interest rate environment is to defer matching the market for as long as possible. And while a 0.37 return is, I have a hard time being excited about it. At least if you look at those numbers, our pig, while still a pig, is prettier than the other pigs, is the best way I can explain it. When our comparables are 0.09, 0.8, even 0.01. Not where I would like us to be, but I think in this market, we are in a pretty decent position. With that, on the investment reports, I'd be pleased to respond to any questions.
Comments or questions?
Madam Chair.
Yes, ma'am.
So, Mr. Lungi, can you go back to that chart again where all of them are pigs, but we have the prettier pig?
Yeah.
So that's has nothing to do with COVID, right? Because that started in the fall off started in February of 20 before COVID really became an issue. So that was just the market and the economy at that moment. And are we assuming that it stayed there because of COVID? I mean, that's a really steep drop.
If you look at the Fed funds, which is the light green line, if you see that really had a sharp drop off. And
Right
that
in
is
April of last year, yeah.
That is the federal government responding to COVID. And
Okay.
so when we go and try to buy a corporate note these days, we're actually having to work against the federal government because they're buying corporate notes as part of their stimulus in the Federal Reserve activity. So we're actually competing in the market with the biggest player.
I guess I'm also asking though, so I do see that green line and you're right, that drop off is steep and quick, more than any of the others. But we started a downward decline in January of 20 maybe? And
Right.
I'm going to assume, because I mean, in January 20, COVID was here. We didn't know COVID was here. So, but the economy was faltering. The economy is faltering. So I guess I'm asking that we start the drop off because the economy was just what it was, and then it continued so precipitously because of COVID. Is that possible?
Yes. I think it definitely continued because of COVID, because of the economic impact and the federal government reaction to COVID. And
Now, having said that, you're correct. Our pig has lipstick on it. It is much better than all the others in there. So you are correct about that. And I guess it would be interesting to look at this chart in about 6 months.
with the potential for inflation on the horizon, and the Fed has started to talk, it started in their speeches to give themselves maneuvering room to raise rates earlier than 2023.
Absolutely. Yeah. I've been listening to that. All right. This is interesting. I appreciate it. Thank you. Thank you, Madam Chair.
Any other questions or comments? Okay, please continue, Mr. Longi.
Thank you. For the revenue report, I'll ask Deb to we'll go to attachment A, but I'll read off from the written report. The authorities received approximately $263 million through May. Our income is basically 3 months behind because of accruals. I'm sorry, 2 months behind because of accruals. We are knocking our sales tax projection out of the park. This is a reduced projection for COVID impacts, and I'll talk about that a little bit later. Our vehicle license and registration fees, the budget of 2.1 million reflects the uncertainty not only of COVID at the time, but if you remember when these were the I-81 revenues, that revenue stream was completely missing its mark. So while we won't get the $20 million that was originally promised through I-81, it's going to settle in at about 13.3 million in the years to come. At least on a revenue basis right now, it looks pretty good. The regional congestion relief fee or grantor's tax likewise has done very well to the estimate. I am continuing to be concerned about the commercial real estate impact, because remember, these revenues are accruing over years to pay for projects that have been, approved through fiscal 25. So still, while the number looks good, that's the only area I really have some concern on. Scrolling down to the transfer, it's $20 million transfer. The only negative about that is it's not going to grow because it's set in legislation as $20 million. I will ask Dev now to go to attachment C. And again, with apologies to Delegate Watts and Board Member Crystal, what I wish to point out here is if you look from September through May, at no time did sales tax be larger than the sales tax received in the prior year. And that is because of COVID. And we did adjust our revenue estimates down for that. But Peggy and I have been listening, and Monica as well, and hearing the state's press releases and using terms like our sales tax is greater than last year, or our sales tax is beating estimates. While we realize that folks who write those press releases may not be financially as attuned as we are, it did strike us that typically when we hear the state saying that they beat last year by 3%, given that parts of the state are actually in economic decline, Northern Virginia is going to be beating that by a couple percent more. So if the state says 3, just as an example, I would expect Nova to be 5 as far as an increase. We talked to the jurisdictions, or some of the jurisdictions. We talked to folks in Richmond. We didn't get any clear answer from Richmond, but like previous times when we've asked questions, the trend suddenly reverses. So you can see in May, we not only beat last year, but we beat the preceding year, because May of last year would have included some COVID impact. We beat the preceding year by $3 million. And while not reflected in this chart, I can tell you we are doing the same thing for the June. So even though oftentimes we don't get answers from Richmond, it appears that there's still value in asking the question. In this case, several $1 million in value in asking the question. We will still continue to try to pursue that, but I can only tell you what they tell us, and at least the numbers are heading in the right direction, where it's back to the state's pronouncements do seem to make more sense on our actual revenue receipts now. With that, I'll be happy to respond to any questions.
Questions or comments?
Madam Chair, I don't want to be the only one that keeps talking, but Mr. Longi, so the I-81 money from what we were told to expect to what we're actually receiving, which is actually more appropriate to say it, what we were told to expect to what we actually expected, is a delta of about $7.5 million, correct?
Yes.
Okay,
About
so
6.7. Yeah.
I'm sorry?
About 6.7.
About 6.7. Okay, so this is, when we get into the authority meeting, this is a discussion we should have with our General Assembly members, because part of how we were going to make up and get money back from when the money was removed from Metro, and again, we all support Metro, was part of that I-81 money. With the I-80 money not coming to fruition, we are still going to be, we still have never been made completely whole, but without the I-81 money come to fruition, we're less whole by another 7 million, which is an issue, and which is an issue we need to address in the General Assembly. I, for one, don't think we can stop talking about this. And I, for one, also believe and I will do this again next year for the General Assembly meeting. We need to have some protective language in over MBTA so this doesn't happen again, because once it's out, it's hard to get it back, as this is proving. And once it's out, the precedent has been set that MBTA becomes a ready pot of money, either to take for any other issue, or to maybe not fund some of our projects because MBTA exists. And so I think we have to vigorously and continuously protect our funding. And by protecting our funding, we're protecting our taxpayers who are being taxed for the purpose of putting money in MBTA for the purpose of doing congestion relief in Northern Virginia.
Thank you, Chair Randall. I could not have said that better myself. I'm in complete agreement. Thank you. Any other comments or questions?
Chairman Michelle, Delegate Law.
Yes, ma'am.
Thank you. So again, I'm at the, I have a problem. I may not be totally understanding everything said, but let me make this assumption. My assumption is that if you ask tax for a projection, they would lowball it, and I'll get into two reasons why. But if there's any question at all on the audit trail of every penny that is appropriately collected as the percentage that should go to NVTA, that would be a very serious problem. And I will want to be involved, period, but that would be extremely serious, which I really don't think is what's happening. If I understood the presentation, two things happened, and they would be, as was indicated, magnified in Northern Virginia to the degree that people were kept from spending on amusement events and meals out. People spent a lot more on goods, particularly in Northern Virginia, ordered online. And fortunately, Virginia was absolutely first out of the starting gate as soon as we could in enacting the internet sales tax. I would also want to keep an eye on, for the future, the changes that were made in this General Assembly session regarding the online collection of hotel, motel accommodation taxes, which some of the Travelocity type of services were not fully collecting on the price of the room. And that, I have no idea, particularly with COVID, how much that might bump up receipts, but it's something that I wanted to just highlight. Hopefully I have been heard on throughout this. Thank you.
Thank you, Delegate Watts. You were heard. Mr. Longi, did you have a comment?
No, I will comment that the General Assembly imposing the internet sales tax was really a big benefit for the state as well as this region. Our revenue numbers would be in terrible shape, I believe. We had calculated that we thought we were getting about a 6% bump prior to COVID just on the internet sales tax. And as our number one source of revenue, that was extremely important and certainly well appreciated by the General Assembly.
Okay, thank you. Does anyone else have any comments or questions? No? Okay, proceed, Mr. Longi.
Second to the last item is the monthly operating budget. I'll summarize this as the operating budget plane is landing dead on the runway, right? I mean, accurately on the runway. We had committed to some pretty significant carry forward to support next fiscal year's budget, and we're safely going to be able to obtain that. And obviously the fiscal year ends at the end of June, and it'll be another month or so before we have a financial accounting, but the operating budget is in a very good position. With that, I'll be happy to take any questions.
Comments, questions?
I don't know if the term dead and runway should ever go together, but okay, otherwise that's it.
I'll stick with pigs.
Yeah.
Chair McKay, do you have a question? I thought I saw you. You appeared quizzical.
I have no questions. I think we're at when pigs fly.
Okay. Thank you. You have another verbal report, Mr. Longi?
Yes, I did want to update the committee on the annual audit. The auditors have finished what's the first stage of the audit, which is the field work where they look at the actual transactions, detailed transactions. They also look at the internal controls and management activity. Thus far, they've brought nothing to our attention that they seem to have any disagreement or concerns about. The next stage will wait till after the end of the fiscal year. Then Peggy will be preparing the financial statements, and of course, they will do the audit and eventually express an opinion on the financial statements. So the audit's on track, I think going very smoothly. Again, thanks. Peggy does so much preparation that they're always very complimentary to her on that. The other thing I wanted to mention is to let the Finance Committee know of some actions that the Governance and Personnel Committee has taken. The Governance and Personnel Committee has asked that we issue an RFP for consulting services for the Executive Director, potentially soon to be Chief Executive Officer, consultation on the position description as well as compensation. We did get the RFP out early this week. It will be, the results proposal should be in enough time for us to present that to the authority in July. It does come with an estimated $20,000 price tag. What we would propose to do for that is to take that out of the operating reserve and then replenish the operating reserve next year, next fiscal cycle. I did just want to let the committee know that that was ongoing so that the members of the Finance Committee who are not members of the GPC wouldn't be surprised by it in July. If there are any questions on that, I'd be glad to reply to them.
Comments or questions? Okay. Is there any other business to come before the committee this afternoon? Okay, as always, Mr. Longi, Ms. Backman, everyone, we're thankful for the work that finance staff does for the NVTA. Thank you very much. If there's no other business, then we are adjourned. Thank you, everyone.
Thank you.
Thank you, Madam Chair.